The local bourse struggled to stabilise yesterday after a return to lockdown in some of the world's biggest economies, triggering the most brutal global sell-off in months. Today, the JSE faces subdued market sentiments, with the activity likely to be a little muted ahead of the US national election next week. For a look at what is driving the markets this morning, we're joined now by Mbuso Zulu, Senior Equity Analyst at Sentio Capital. Mbuso, very good morning to you. Thanks for your time this morning. The JSE all-share ended the day nearly 0.8% in the red yesterday. How have the markets opened this morning?
It's pretty much the same picture. The JSE is still trading in the red, slightly down this morning. And that's pretty broad-based across all sectors. We see financials, resources, as well as industrials trading lower.
Now, gold, Mbuso, is said to be in its worst monthly run since the year 2019. Give us a sense of this commodity's latest moves and what factors are driving those moves.
Gold trades as a hedge against inflation, and in times of extreme uncertainty, you do see a flight to safety, and that is towards gold. We've had quite a tumultuous year. We've had the COVID pandemic, and gold has had an excellent run over the course of the year. We're now going into the US elections, and there is uncertainty as well that will go with that, and that will of course affect global markets, including ours. What you've actually seen, which is you haven't seen this in a decade, is you've seen central banks selling down gold. This could be because they're just capping some of the gains, taking profits. But central reserves are one of the natural buyers of gold. And of late, you've seen net selling from the central reserves. So this will have impacted the price that you're seeing on gold now.
And the US election on November 3rd will determine who has control of the executive and legislative arms of the world's largest economy. This now means who controls the levers that will determine the next round of COVID-19 fiscal stimulus. Is there an indication at all of what results the markets are leaning on?
The markets seem to be pricing in a Democratic win, and also pricing in a blue wave. So this means that the Democrats will take the lower and the upper house. And this was last seen with Obama's first term as president. You have also seen, just with the current round of stimulus talks that have been taking place, that the Democrats are more prone for a higher amount of stimulus, looking for 2.2 trillion, whereas the Republicans are in favor of a lower amount of stimulus. So if you do have that outcome where you have the Democrats winning, you're likely to see a greater amount of stimulus, so more fiscal spend coming on board. And this, of course, will be positive for the broader US economy. Blue wave will also be positive for EM markets. You've seen Trump have quite an antagonistic relationship with partners, allies, US allies, as well as the likes of China. And if you do have a Democratic win, you are likely to see improving relations on the international front. And maybe you don't have a complete repeal of the rise in tensions between the US and China, but you will have a tapering somewhat because Biden sees Russia as enemy number one, and he does have a view that China should come more to the fore and play by the rules, by international rules, but it isn't as antagonistic as Trump is. So if you have improving relations, even if somewhat, between the US and China, that is, we can read across and say that will also be improving relations across, improving relations for EM countries, because China is a big consumer of resources, and us in South Africa, we do produce resources. So blue wave in aggregate will be positive for broader EM. Also for the dollar, you will see the dollar weaken somewhat, and then our currencies strengthen on the back of that weaker dollar.
Now, looking at company news, mobile operator MTN has reported on its results for the 9 months to end September. Give us a sense of what those numbers are looking like.
The numbers look pretty solid. If we do just look at the Q3 numbers, you see that there's been a quite sizable positive improvement in just the profitability of the business, especially if you look at SA, where margins have improved. It's only in Nigeria where the EBITDA margin has contracted slightly. However, you see service revenues improving in SA as well as Nigeria. And then you see that they've increased their target capex to 26 billion, which is slightly higher than where they had delivered in the prior period. Also, quite interestingly, they've opened their network infrastructure to companies that will provide mobile data and voice services. And this will put them against Cell C, but it should be positive in the long run as they launch their MVNO operations. They've also exited the investments in Nigeria, Jumia, and you've also seen them localize their shareholding in, for example, Zambia, and to a somewhat greater extent in Ghana as well.
Very well. Thank you so much for your time and that very thorough analysis. Mbuso Zulu, Senior Equity Analyst at Sentio Capital, giving us the latest in the world of business.